Welcome, dear traders. It's me, Kate Stichina, and you are watching a recap of the agent session. Friday the 13th is likely to be a good day for stock markets. There was a surge in optimism on Wall Street yesterday during the American session. This morning, stocks in Australia, New Zealand and Japan rose as well. What's going on forex? Watch our video review and find out. Let's start. Yesterday, volatility increased significantly after the release of inflation data. The consumer price index for December declined to 6.5%, confirming that inflation had peaked in June. Back then, the reading was 9.1%. After that, it fell to 6.5% in 6 months. Traders were hardly surprised by high volatility given the upbeat CPI result. However, stocks did not rally following this report. Perhaps investors priced in such a scenario a long time ago. Almost all market participants came to a similar opinion on the Fed's next rate hike. Yesterday, only 77% of traders anticipated a smaller rate hike. On a Friday morning, nearly 94% of speculators are betting on such a scenario. The CME FEDWATCH tool tracks the market sentiment. Let's discuss the comments of some Fed policymakers. Philadelphia Fed President Patrick Harker said on Thursday that, in his view, hikes of 25 basis points would be appropriate in the future. Raphael Bostic and Thomas Parkin expressed similar points of view. However, some Fed members do not share their optimism. St. Louis Fed President James Bullard believes that the interest rate should remain high for a longer period of time. Speaking at a financial forum in Sweden, Jerome Powell refrained from commenting on the future plans for monetary policy. Such contradictory statements did not bring clarity, but only caused more uncertainty. However, a slowdown in consumer prices to 6.5% can be called a positive result. However, it's still very far from the 2% target set by the Fed. The regulator wants to see inflation running steadily near this level. Given external and inertial risks, no economy is immune to some unpleasant surprises today. The world's central banks should take into account these risks when making policy decisions. It may help them avoid potential challenges. However, traders sometimes ignore such risks and do not even factor them in. So the Fed could abandon monetary tightening only if there is a real threat of a recession. However, this is hardly unlikely now. The economy and the labor market are cooling gradually. For this reason, only the US dollar incurred losses. The situation with the greenback is rather curious. Last year, it soared to new highs thanks to monetary tightening, while its rivals plunged considerably. The widening rate gap between the Fed and other central banks was an extremely bearish factor for many currencies. However, this period has come to an end, and the US currency is longer able to climb higher against other currencies. In the morning, it was trading near 7 months low of 102.30. Besides, its downward potential is rather high. It has been moving in the bearish corridor of 102.20 and 102.40 for the entire week. In the Asian session, the greenback remained in this price corridor. It rebounds only amid a drop in risk appetite. It appears that its upward cycle ended last year. However, what's bad for the US dollar is positive for the yen. The latter has been the main outsider in the currency basket in 2022, and last October the dollar-yen reached a 32-year high of 151.95. Throughout the year, the Bank of Japan has remained strongly committed to its ultra-soft stance. Yet, at the December meeting, the regulator slightly loosened the shackles on its 10-year yield target. This decision came as a pleasant surprise to market participants. It also renewed hopes for a policy reversal. The Japanese currency was able to climb amid these expectations. A strong bearish trend for the dollar-yen pair was noticeable in early 2023. As seen on the chart, the pair gained momentum after rebounding from 132.80 on Wednesday. In the morning, the pair touched the support level of 128.40 after another drop. Now the yen is moving to a strong support level of 126.30. The momentum could slow down. It does not mean a trend reversal. Bears continued to push the price closer to the lower border of the intraday corridor of 128.20 and 129.40 in the Asian session. The Australian dollar, which is very sensitive to the movements of the US stock indexes, also grew on Friday the 13th. The Aussie is one of the strongest currencies. It's the national currency of the country with a large and resilient economy. Historically, the Aussie has been mainly bullish, backed by Australia's foreign debt denominated in Australian dollars. It climbed immediately amid the US dollar's weakness. It also made an attempt to break through the psychologically important resistance level of 0.70 amid market optimism. Rising oil prices and another injection of 132 billion yuan by the People's Bank of China boosted the pair. However, it was trading rather sluggishly during the Asian session. The news about a contraction in China's imports for the third month in a row limited its upward potential, so the AUD-USD pair rose to 0.6981. It was moving in the range of 0.6945 and 0.6987, far from the pivot level of 0.70. In the last hours of the Asian session, the New Zealand dollar managed to advance. The NZD-USD pair grew to 0.6406 from the previous closing price of 0.6394. The bullish momentum remained strong, so the pair was hovering in the upward channel of 0.6358 and 0.6409. And that's all for now. Hit the subscribe button and keep close tabs on the market developments. See you soon.